Thanks to everyone for joining our live session. This is setting up an effective chart of accounts. We've put together this guide to make sure you have everything you need to format a chart of accounts that gives you the most utility possible. It's an essential foundation to have, and you'll see that when set up correctly, it can save you time and make your accounting cleaner and easier. I'd like to introduce our accounting expert, Taylor Brugna. Taylor is a partner at the Real Estate CPA, a CPA firm that's highly specialized in real estate accounting. He's worked in accounting for companies like PwC and Tarlow and Company, and has a deep understanding of property management accounting specifically as the owner of Remington Property Group. He has a track record of using technology to simplify processes and help grow the business he's worked with, and has lent his expertise to our latest guide, Setting Up an Effective Chart of Accounts. And don't worry if you haven't checked out this guide yet. We'll share a link to download a free copy at the end of the session, and Taylor will walk through all the essentials you need to build this important foundation for accounting success. We've also built in considerable time at the end of the presentation to ask any questions and steer the conversation in the direction that's most useful to you. So I'll pass it over to Taylor so we can jump right in.
Thanks for having me, Jeana. I really appreciate it. I'm excited to kind of get into how a chart of accounts can make a property manager's business kind of more efficient and have crystal clear financial reporting. So an effective chart of accounts is all about getting the basics right. And I think that brings a lot of benefits. I think you can save time and get a crystal clear look into your books, get better insights and easier reporting to your clients, and get through tax season with less hassle. But it's also about growth and contributing to your bottom line. You'll save time from making accounting more efficient, of course, but you'll also get a better idea of where to focus that time to get the most benefit.
So Taylor, let's start with the basics. What are the main categories we're including in our chart of accounts?
Yeah, of course. So first things first, I think it's helpful to define what a chart of accounts is. And a chart of accounts is basically an index of all of your financial accounts in your accounting system. So these accounts are broken up into 5 separate categories, and I'll kind of briefly touch on kind of what these are now, and we'll go into more detail as we kind of go throughout this presentation. But the 5 main categories are assets, liabilities, income, expenses, and equity. You're probably familiar with kind of the broad terminology of what these accounts mean. All accounting systems kind of start with these basic 5 types of accounts. But something really nice about Buildium is that you guys have included a template that basically is very specific to property managers, which ultimately makes everyone in the real estate space's life's a lot easier, because me as an accountant for the property managers, I'm very familiar with the chart of accounts. And then of course, for the property managers, all of their income and expenses that they're incurring are of course highly specific to real estate. So I'll go ahead and kind of start with 2 of the most important, I think, and kind of these are more of balance sheet items. So I'll start with assets and liabilities. So if we're looking at assets from a property management perspective, the most important accounts that you're going to have in this section of your chart of accounts are really your cash accounts. There's multiple kinds of cash accounts. There could be a trust account that you are holding clients' rents in and paying out property level expenses. There are security deposit cash accounts that are, of course, holding your tenant security deposits. But there's also your operating account, which really kind of determines the income and expenses that your actual property management business is incurring. And maybe, Jeana, it's a good time for you to kind of touch on what the difference is between like corporate books for the actual property managers and actual cash accounts for the operating business, if that makes sense.
Yeah, definitely. I think one thing that that's important in your setup is as you add in your properties, it's important to help the software out and basically saying that each of these properties uses a particular bank account by default. So you want to make sure that it's clear in the system and you have some sort of designation between your operating bank accounts that get used most often, putting in rents, putting in other fees that you're collecting, and having a separate account to collect your security deposits, other types of deposits, and most of your liabilities. And by having that set up and being prompted to set up in your property management software, it can help automate certain workflows. So the system will know if you're collecting rent, that it belongs in your operating bank account. And it can save a lot of time when you're going through just making sure that your trust accounting accounts are kept organized and clean.
Yeah, no, I completely agree. There's a lot of features in Buildium that kind of help automate just that side of the balance sheet. So anything cash related. Maybe it's helpful to touch on too how Buildium can link bank accounts into the accounting system too, and pull in transactions.
Yeah, so if you have a split like that, which is recommended, where you have your operating funds as well as your liability funds, what's nice about Buildium is that you can automatically link it up. You can sign into your online banking account and have the system pull over transactions. That'll help you a lot, especially during the reconciliation process, to make sure that you're not missing any entries or that you've recorded the wrong date. It'll kind of guide you through making corrections if need be. But being able to see your accounting records that you've recorded on the books in your software versus your real life transactions will help you avoid certain mistakes that can kind of cause headaches later on down the road.
Yeah, no, absolutely. I completely agree. I think that's a pretty solid summary of the asset section, at least, because as a manager, I really think cash is going to be the largest component of that. Now what we can do is move on to the liability section. So of course, this is another key component of the balance sheet. And I think kind of what's primarily going to be on this balance sheet is going to be security deposits. And then as a property manager, technically any rents that you're holding on behalf of your clients are also considered a liability on your management company's books. But really, I would say the most common or the most important account to reconcile on a regular basis on the liability side of things is going to be security deposits. So a lot of times, for example, a lot of my clients keep the security account very clean and segregated. However, there are situations where the operating account for the properties kind of gets commingled with security deposits, because what you'll have is maybe you have a tenant who uses rent as security deposit for a last month when they leave, or you have someone who incurred damages and now you need to transfer those security deposits into your operating account to cover expenses. So I think security deposits is another really important account on the chart of accounts that I think I look at as an accountant on a regular basis, and a lot of my managers are looking at on a regular basis, daily, if not every other day, things like that. So I think that's another important one.
Taylor, as an accountant, are there certain reports that would be helpful to kind of reference and compare when you are trying to reconcile that liability balance with the balance in those appropriate bank accounts?
Yeah, of course. So the asset and the liability section of security deposits really go hand in hand. So on the asset side, you're going to have a security deposit bank account. And let's say there is $10,000 in the security deposit bank account. What I would expect to see as an accountant is that if you're holding $10,000 in cash that are security deposits, I would expect the liability side of the security deposits to also be $10,000. Now, maybe there's a situation that I don't want to get too technical here, but like maybe there could be a situation where one of your owners is holding security deposits on behalf of you, and then you have less cash and a higher liability. But that can turn into a cash flow problem, because let's say you had to pay a bunch of tenants back at once for their deposits, but some of your clients are actually holding their money. You then have to go collect from your owners, then receive that money into your security deposit cash account, then pay it out. So those really go hand in hand. So to answer your question on kind of what reports I'm looking for, I'm going to look at a security deposit report in Buildium, but I'm also going to look at the security deposit bank statement and just try and line those up the best I can. So
Yeah, and that's a good point about kind of making sure that you do have that cash available on hand when it comes time for those tenants to move out. Because I know a lot of our property managers out there only have a certain amount of time that's allocated, usually within their state requirements that say that they have to pay back those liability balances. So, you know, if you do pay out money or it's held by a different person or by the owner, keeping on top of that and still keeping a record that those funds are held in an account somewhere,
yep,
it is always important. Just keeping tabs on that, where the cash is flowing.
absolutely, completely agree. Okay, great. So now that we've covered 2 of the 3 main accounts on the balance sheet, the third and final one is just going to be equity. There's not much here that we need to kind of cover in detail, but I think some of the important things to look at when you're looking at your own balance sheet as a property manager is the equity section is always going to have 3 major items on it. So really the first one is your contributions into the business. So if you needed to put a contribution to fund operating expenses or hire staff or pay for software, that's going to show up in the equity section on your balance sheet. So I like to have a contribution section for the property manager to keep track of how much money they've actually put in. Kind of going along with that, there is typically an owner distribution or owner draw account where it keeps track of how much money you're taking out of the business. So if you're transferring yourself a salary once a month, after you pay management fees, maybe you take some of that money and transfer it into your personal account to go ahead and pay some personal bills. That's something that is super important to keep track of, because really it helps you understand not only the business's cash flow, but your own personal cash flow to kind of manage the kind of rest of your situation. And lastly, kind of the other item that's on the balance sheet on the equity section, and this really links to the profit and loss that we'll get into in a second, but the last section is going to be your net income from that year and any prior years. So that's called retained earnings. But really what this account is your income or loss for the year as a property manager is also going to be added to that section to try and make sure that the balance sheet is balancing. So not much of a long list of chart of accounts in the equity section, but it's really important to keep track of how much money you've put in and how much money you've taken out. So
yeah, and what's great about, like you mentioned, the balance sheet report and that equity section kind of splitting up into different elements, money that has been contributed, money that's been paid out, either to owners or to the company owner themselves. What's nice in the system, in Buildium in particular, you can notate your fiscal year end. So those line items, those elements of the balance sheet, like net income and retained earnings, can be calculated automatically for you. The system can pick up your fiscal year end and then make sure that your retained earnings balance is accurately reflected on that balance sheet. And the same with the current year's net income as well. So it saves a lot of time having to do any sort of manual entries to get the balance sheet to balance and get those reports in order.
yeah, sure. And everything I just said, I kind of think it's always tough having these conversations, because as a property manager, you need to look at accounting in 2 completely separate lights. You have to look at, one is my own personal business of the property management company. And then 2, you have to look at your rental owner's financials, and are those accounts being reconciled too? So Buildium makes it kind of on this equity topic. I just thought of something that Buildium does that I really like. It really makes it easy to have your owners not only pay the owner draws out monthly pretty much automatically. Buildium will kind of calculate the amount owed to each owner every month, however frequently you choose to run that owner draw process. But it also makes it really easy to actually contribute money into Buildium, into your property manager's account. So personally, I'm an investor myself. If I'm doing a large scale renovation that I know my manager is managing, I'll log into Buildium, go into my personal portal as a rental owner, hit send funds, and actually just contribute funds to his account right through the software. And kind of where I'm going with this is that if I run a balance sheet for all of my properties, I'll see those contributions right on the balance sheet. So it's super helpful to be able to have that feature and easily keep track.
Yeah, and as an investor, I know that, sending reports and keeping up to date on how your property is performing is really important, and being able to see the details between what is your operating activity versus kind of more of the investing side, I guess you would say, in terms of money that you've contributed. I know that on certain reports, especially on the rental owner statements, being able to send more detail to owners in general is always best, because you can help avoid or even answer some of the questions that those owners might have that they would send you an email for, but instead they can find the answers themselves through the details that you're providing on their statements and on their reports.
Right. I think that's a great point. And I think anything that a software or having more data can solve, kind of in lieu of additional communication, just makes the whole business more efficient. So I think that's great.
Yeah.
Okay, cool. So I think kind of circling back to our initial discussion of, okay, what are these 5 main accounts? It's assets, liabilities, equity. Now the last two, personally, my favorite two, because I think a rental business is just heavily kind of shifted towards these categories. But these two last categories are going to be income and expenses. So first, I'll touch on income and kind of what accounts in the chart of accounts I think are really important. And then I'll go into expenses a bit more, which I think we can get a lot more detailed with. So on the income side, again, if we're looking at it from two different lights, there's one on the rental owner side and then one on your management company side. But on the rental owner side, I think of course, major accounts that you're going to be looking at on a daily basis for sure. So one's going to be rental income. So of course, all the rents that your tenants are paying. A lot of managers have certain preferences on how they track certain types of income. I think Buildium does a great job kind of giving you a good template as a starting point. I like that it's highly customizable, and if you want to add a chart, add an account to the chart of accounts, they make it super easy to do so. But what I mean by that is, so a rental income is always going to be your largest income item. However, of course, as you guys know, there's going to be late fees. There might be pet fees. There might be application fees, things like that. And you can get really granular with how you want to track income. There could be utilities reimbursements. There could be a certain kind of rent income. And Jeana, maybe it would be good here to kind of touch on how Buildium can use these the types of income accounts to kind of work with how management fees are charged. So like an example that I just want to bring up real quick is that I know some of my clients will automate the application fee or late fee account, where they could send a certain amount of the late fee to their property management company account, because it just automates the fee collection process.
Yeah, absolutely. There's really 3 types of income that we like to talk about a lot with our customers in particular. And, you have your income like rent, which will flow into, gets collected from the residents, flows into the operating bank account. And that's income that property managers will charge a fee on. So they'll take a commission on that. So you want to make sure that 100% of that income is showing to the owner, and then you're showing that you're collecting a commission and a fee on top of that. There might be other income that you're collecting, such as utilities, that are just a direct sort of pass through. So you collect them from the resident, and your company might not charge a fee on that. So you want to make sure that's set up as what we call a non-commissionable income account, meaning 100% of the money goes to the property, so you could use it more than likely to pay off expenses on the property. And then the third type is what we refer to as management income. And these are fees, like you said, some property managers might split late fees that they're collecting, where 50% goes to their owners and then 50% goes to their management company. So by setting up your chart of accounts with two different GL accounts, you can specify that this late fee account goes to the owner, is income to the property, and then the other late fee income account is management income, meaning anything allocated to that particular GL account will go 100% to your company. Some other examples of that might be an e-pay convenience fee, where your company is collecting 100% of that income so that you can then pay off transaction fees or even just generate revenue from your business.
Yeah, absolutely. And you'd be surprised. I mean, I think it's funny because I think a good fit to have this conversation, because a lot of property managers come to me for bookkeeping help, and I see that they aren't taking full advantage of the software. And that just makes both of our lives more difficult, not only on their side, but also on my side. I need to then go ahead and manually break out management fees into a bunch of different categories like you just mentioned. But instead of doing that, what I like to do is just show them how you can automate more of this process by having more of a detailed chart of accounts. And I think that template really puts managers in the right direction, because even if they aren't using it, it's my job to make sure that they understand that these accounts are actually really helpful, and they're there for a reason, and they were thought through in great detail. So I think that's great.
Yeah, and having those settings kind of mimic real life policies that property managers are putting in place. You know, like you said, by setting that up ahead of time, it can really save a lot of time and headache later on down the road if you are making sure you're taking full advantage of that type of policy setup and automation.
Sure, absolutely.
So what about expenses, Taylor? I know that there's sometimes confusion around what to actually count as an expense and how to classify different types of expenses. How do we define those in a way that makes sense for property management?
Sure. So I think expenses are probably the single most important category in your chart of accounts. And the reason being is because the expense line items are probably what your rental owners are going to be looking at on the most frequent basis to make sure that their properties are running profitably. The easier it is for them to understand the expense line items, the easier the owners' lives are to then make decisions about their portfolio. So do they want to grow the business? Do they want to refinance? Do they want to sell the asset? How detailed your expense chart of accounts are is really helpful to be able to actually make those decisions. So if we go into just kind of a couple of different types, and again, I think Buildium does a really nice job kind of listing out some of our general expenses here and kind of what's a good starting point. So first, what I like to touch on are operating expenses. So operating expenses are pretty much just anything that you could think of that is related to actually running a specific property. So what that means is you might have cleaning and maintenance, you might have repairs, utilities, taxes, insurance, you may have pest control. All of these things are going to be expenses incurred to run the properties. And another nice thing about Buildium is that there's a starting point for expenses, but there also can be a sub-account feature used that really can get a lot of detail into your financial reports. So an example that I typically see sub-accounts on a regular basis is something like repairs and maintenance. So the term repairs and maintenance is very general. And I see managers kind of all over the spectrum on how detailed they would like to get with this. But I think if you lump everything into repairs and maintenance, it's not really super helpful, because it could be a flooring repair or a kitchen cabinet repair, a sink. It could be a million different things in a house or an apartment that goes wrong. So what I like to do is have a sub account under repairs and maintenance that will total into one account. But maybe you have, I don't know, kitchen as one of them. You may have bathroom as another. You may have electrical, plumbing, HVAC. There's a million different ways you can go with this, but I think it's great that Buildium has a sub-account feature that kind of allows you to put accounts under repairs and maintenance. Anything you want to add there, Jean? Does that make sense?
Yeah, I think that that's a great point of, making sure you have that higher level parent account in case you do want sort of high level totals or aggregates that you can take a look at and report on, but having them split out so that they get a little bit more specific and really just tell your owners, your investors, it helps you tell the story of kind of what happened on their property and give them, like we were saying before, a lot more detail. So there's less questions that you have to manage. Another thing I would point out is utilizing account numbers for your chart of accounts is another big thing to kind of keep your reporting more organized, because those parent accounts can have numbers associated with them. You can use the sub accounts to organize that list and help your team. They might search by account number, see the parent account and see all the sub accounts. And it just helps them better understand how they should allocate those charges or those invoices that are coming in.
Yeah, it's just another one of those features that kind of gives you another option to further organize your chart of accounts, make it cleaner. If you want to see taxes before utilities, or if you want to see insurance after taxes, these are things that account numbers can all accomplish by putting it in a numerical order. So I think that's really cool. But something else I want to touch on the repairs and maintenance side that I think super helpful for all managers to have a decent understanding of is kind of the difference between a repair and an improvement, and how a good chart of accounts can really help your owner understand what's going on. So I'll give you a really good example. I just did a big renovation on a single family home that it was a kind of an old rundown property that needed just pretty much everything down to the studs. It needed flooring, paint, kitchen, bathroom, everything. And I had my property manager handle it. And I was really able to get a detailed breakdown of where I spent money on each of these items, because repairs and maintenance and the improvements accounts on the balance sheet were actually broken out. So an example might be, if you didn't do it this way, you might be looking at your P&L for your business. Okay, you see your rental income of $10,000 or whatever it is, but then you go ahead and see a $50,000 repair and maintenance item in 1 month, and you see that you lost $40,000. Realistically, that's not the case, of course, because you're improving the property. There's a future benefit tied to it, and it really shouldn't be on the profit and loss. It should be on your balance sheet. But what having a detailed chart of accounts with sub accounts does is that I didn't just see a $50,000 kind of item in repairs and maintenance. I saw $5,000 in flooring. I saw $7,500 in electrical. I saw $5,000 in HVAC, things like this. And then I told my manager, hey, can you do me a favor and move this off of the repairs and maintenance section on the P&L and move it to the balance sheet as improvements. Every manager is going to have a different policy on kind of what they will do on the accounting side. Some managers like to kind of make that decision. Is it a capital improvement on a balance sheet, or is it a repairs and maintenance item on a P&L? But kind of what mine chooses to do is leave everything on the P&L, but it's detailed enough that I can make the choice myself and clearly see I didn't actually lose $40,000 this month. I just need to take this 50, or excuse me, yeah, I'm using a bunch of numbers in my head here. Take the 50K and move it onto the balance sheet. So I think that's really helpful too.
Yeah. Yeah, I know that. I mean, repairs can definitely be tricky. There's such a wide range out there. I think we see that in a lot of cases with other fees that property managers are charging. Do you have kind of a rule of thumb of how to label those types of fees?
So what fees are you talking about? I'm sorry.
Yeah, it could be. I know that management fees is definitely a big one,
sure.
Probably the most common expense, but they're, we've heard from a lot of our customers that they'll put a different fee structure in place. They might charge a renewal fee or a placement fee and things like that. Do you have any recommendations on how to label?
Yeah, of course. So I like to think of management fees as in two categories, really things that are recurring and things that I can expect as a percentage of rents being collected, and also things that aren't recurring. So like typically one-time events. So how I like to break out management fees is of course you have your main account that's kind of typically what everyone uses to collect management fees on the automated process that Buildium has, and just a percentage of rents. I'd say 99% of clients that I work with have a percentage of rent somewhere in their fee structure. Now, what I don't like to do is lump in the one-time expenses into that account. So what I like to do then is have sub-accounts or even have separate accounts for things like tenant renewal fees. So if they are re-signing a lease, generally there's of course a fee associated with that, and I want to track that separately because I know it's not going to happen every single year. The average tenant in at least my portfolio probably stays anywhere from 2 to 3 years. So I know that it's not going to be there every single year. Another one might be a tenant placement fee. So of course, all the hard work you guys are doing to screen tenants, check credit, show the units, things like that. I want to see that separately too, because that's something that again, kind of based on how long your tenants are staying in these units, it's not going to be a recurring expense each month. So I think it's really helpful to see as a rental owner, how much of this is recurring, how much of this is one time. So really those are the three kind of major ones. But of course, depending on your fee structure, the simplicity of adding and deleting accounts in Buildium really just makes this easy. So if you charge fees for maintenance coordination, or if you charge fees for renovation management, these are things you can separate too. And I kind of find that doing that as a manager builds trust with your owners because your fee structure is very transparent. So I think it's a win-win for both parties there.
Yeah. And it's a great help too when it comes to talking about reconciliation. It's not just for bank accounts. This having a split, more detailed fee structure, you can look at things like your move-in activity or new leases that have been created. You can look at your renewal activity and then tie that back to those fees to make sure that you're kind of reconciling and ensuring that all that revenue had been collected. So that's
absolutely. There's two ways. I mean, there's multiple ways to reconcile, but kind of that first super important way is just simply go through the bank statements and categorize every single thing to an account in these chart of accounts. But also kind of my job, and as a business owner, a lot of property managers are kind of wearing the same hat. They also have to think analytically about their books and records. So if you see, I don't know, a $20,000 management fee income account on your company books, but you know that 8% of your rents for the month are really only 15, or maybe it's 25. You know that there's a problem that needs to be addressed. Having more detail, what that does is it just makes your life easier in that sense. So if you have a management fee account that just has the percentage, well, you know, if you have 100 units paying $1,000 a month, you know exactly what that account should look like every month. And if it doesn't, probably something went wrong in the process somewhere that now you have to fix. So
yeah. And thinking analytically, I think that we've heard from property managers that it can sometimes take a lot of time. So having a software that can present you with a lot of those analytics and kind of help you through, like for an example, our analytics hub includes leasing activity. So you can see that activity on new move-ins, renewals. You can see income that you've collected and kind of break that down by the general ledger account. And we also have analytics on the company side of things where you can see revenue you've collected from basic management fees, but also having that broken down by different fees like placements, renewals, and also maintenance markups as well. So giving you kind of that insight without a ton of manual work that you have to do is really helpful and supportive in those kind of reconciliation processes. But yeah, let's move on to liabilities next and kind of how those should look on chart of accounts.
Sure. So that first one that we kind of discussed earlier of kind of security deposits, I think that's going to be your most common one that you're looking at. However, the property manager chooses to keep track of these. I mean, again, it's highly customizable what you want to do, but maybe there's 2 to 3 accounts that you have here. So one might be the security deposits that you're personally holding in your security deposit cash account. And that's something that again, as we discussed earlier, is going to tie out, or it should be in theory close to what your cash account is holding in the security deposit section of your bank. So there's that account. There might be an owner-held security deposit account, which means that, kind of what I was saying earlier as well, if you have an owner who didn't transfer you the security deposits that they're holding, it's good to keep track of what the owners are holding, because there is going to be a time that you have to pay tenants out for the security deposit. And if you don't have the cash, you're going to need to go collect it. But other than security deposits, I think the other really important one, and Jeana, I'd be curious to get your kind of summary of this feature, because even it's a great feature, but I think it's relatively new to me too, is just kind of what the prepayment function looks like. So just real quick, what a prepayment does in Buildium is that if a tenant pays rent, let's say they pay on December 31st, but it's for January's rent. So really it was due on 1/1 or 1/5, whatever your policy is, and they pay in December. There's a really nice feature in Buildium that basically allows that liability that you have until rent is actually due to be tracked as a prepayment on the balance sheet. Is that right?
Yeah, that's right. So you can set it up to kind of automate that whole process for you, because as we know, it's a lot of work to track when your tenants are paying, especially if they're paying online. Online payments are automated, so you don't want to kind of bog that down with manual work to make sure that the funds are allocated to the right account. So yeah, that's exactly right. You can set up the system to automatically pick up that the funds for rent, for an example, aren't due until the 1st. The system can recognize it's the 31st and automatically allocate the funds to our prepayments liability, which is like a short-term liability where you're just holding that early payment temporarily. Then once the money becomes due and it picks up, the due date is now the 1st and the funds for rent are due, the system will automatically apply the funds from that prepayment liability account over to rent income, and just kind of help keep your, reports and income statements more consistent. So you're actually seeing the income being recognized in the month that it's due, rather than too much in the prior month.
Right. And part of the problem with cash basis accounting, which kind of effectively means that you're recognizing income and paying expenses and recording expenses as they're received, is that sometimes I'll look at a P&L and I'll see $5,000 of rental income in March, but I'll see $2,000 in April. And I might see $8,000 in May and $4,000 in June. Now tenants paid on time, everything got done, and actually the income looks great. But if you don't use this prepayments feature, and again, it's optional, you are doing, I think it's better accounting for sure. I think it's a little bit more complicated, but in my opinion, I think it's worth it. Because you aren't seeing those big swings month to month. You're actually seeing, if the rent roll says that it's $5,000 per month, the income is then being matched to that. And that's how this liability line plays into it, is that it kind of sits in that chart of accounts section first. And then when it's ready, it'll move to that P&L and kind of smooth out that income section there.
Yeah, I think that's such a great call out, Taylor, and you having firsthand experience, having to look through those reports and making sure that early payments don't get mistaken for delinquencies. I think it's the commitment to understanding how the setting might work early on and how the accounting works in terms of moving liabilities and applying it to income later on. It's worth that investment, because you don't have to spend the time later on trying to either explain reports or better understand those reports.
Yeah, absolutely. Okay, so I think we covered just about all of the basics for each of those kind of 5 sections there. Can you walk through how you can actually set all of these up inside Buildium?
Yeah, absolutely. And thank you so much, Taylor, for all your insight. It's always so beneficial to get the perspective of an actual accountant, an actual CPA, just making sure that our customers are getting set up and on the right foot. But yeah, I think we obviously talked a lot about the chart of accounts and getting that set up and making sure our customers are set up for success. We already equipped a list of general ledger accounts that's listed out in the chart of accounts. And it's sort of templated and broken out where you might have kind of the basics like rent income, management fees, expense, repairs income, repair expense. But that list is completely customizable. So, like we were talking about before, if you do want to break that down into sub accounts, get a little bit more detailed, add account numbers, Buildium also offers the flexibility to do that as well. And adding those accounts is easy. You can do so manually, even on the fly, as you're kind of setting up the account or recording entries. But we also have a designated workflow to import a list of chart of accounts. So if you have kind of a standard list that you want to use, you can just simply import that right into Buildium and kind of get set up much quicker. And I think another kind of important factor when you're deciding on how you build out the chart of accounts is really just getting your team aligned and understanding when to use which account. In Buildium, we have a notes feature where you can add details, and then the rest of your team can always access those notes. So if there's a question on when to use what account, they can always reference that. I don't know if you have any best practices on adding in notes and details for teams like that in your experience.
Yeah, well, it's just, so I actually use this feature myself for all the clients that use Buildium. And basically what I always recommend is just there has to be consistency, because some of my clients, if you're small or large, really, if you're small, hopefully that the plan is to get large enough at some point that you have multiple staff working on your accounting, working on your property management. And if that's the case, you generally want your P&Ls and balance sheets to really all look the same. So like a really good example might be on the utility side. Everyone typically has their water, electric, gas, whatever the case might be. Some clients will lump it all together into utilities, where other clients like it broken out perfectly. It's a good idea and best practice to set that expectation with not only your clients but also your staff, and just say, hey, I need all this broken out exactly the way we have it on the chart of accounts. And it might be something too, like insurance. Maybe you want regular insurance, flood insurance, or liability insurance. Like there's all different things that could just have their own set of rules, and you can keep them in the notes feature. You can keep them in a separate document somewhere. But either way, it's best practice to have a system like that in place.
Yeah, and that's really the benefit of having a cloud-based software such as Buildium, is that not only can you and your team access that from anywhere, but also as you're making these updates or changes to your setup, your team is seeing those updates in real time. There's nothing that you would need to do to make sure that they're seeing the most accurate and up-to-date list.
Yeah, and then another kind of thought, building off of that a bit, is that let's say, of course, in a fast-growing business like a property management company, there's changes to a chart of account all the time, right? So if you need to make a change to your accounts, it's really easy to actually just go ahead and make that edit. I like to send out like a company-wide email, making sure everyone knows that I changed something, so that in the future things are actually going to the right account. But a question for you, actually, can you like manage each user's access in Buildium to say that you have one accountant who doesn't have the ability to edit chart of accounts, but one might be able to, or the owner might be able to? Or is that just like anyone in the software can change it?
Yeah, you can control that. So as a part of kind of the user roles or the user profiles, you can specify if someone's able to just view the list, the chart of accounts, or if they can edit, delete, and make changes. So yeah, you can control who on your team you want to be able to make those adjustments. but then also still giving your team access to view the detail that they need to record those entries most efficiently.
That's great.
And I think another kind of big time saver is being able to set up your vendor profiles, because like we were saying before, expenses is probably one area that a lot of our customers like to focus on, because it can be a little bit tricky in terms of unexpected, expenses coming in and just knowing how to handle those. So when you're setting up your vendor profiles, what's nice is that you can tell the system which general ledger account should be used when you have an invoice or a bill that comes in from that vendor. It can help take a lot of the question off the plate of your team of which account they need to allocate to by just having the system do it for them.
I've got a perfect example of that actually. That just happened last week. So I've got a client that has one person on their team who's a contractor who's specifically in charge of paying utility bills. Because there's so many of them, obviously, in this business, could have hundreds, if not thousands a month, depending on size, right? But we were originally coding them the way the invoices came in. It looked like they were actually utilities expenses because all of the descriptions and everything like that said utilities. However, if we would have used the system from the start and just said that XYZ vendor is actually for contract labor, or someone who's really more of like an accounting or bookkeeping role, all of our clients' utilities wouldn't have been overstated, and we would have had a separate line item to actually show like labor costs instead. So going forward, what we did is we entered in the vendor and said, here's the default account. It's not utilities, it's contract labor. And that solved a lot of our problems. So
yeah, that's great. It's always great to hear those kind of real life examples of how that automation can make a huge difference. So it really doesn't have to be hard. Like Taylor mentioned, there's real benefits for your whole business, and an airtight chart of accounts that helps you better track the performance of each property in detail and across your entire portfolio. So we will open it up to some Q&A now. Feel free to ask anything to either Taylor or myself. And the session recording will also be available soon. And we'll send you the link to where you can see that and download the full written guide. Thanks all. So we will open it up